know about ShowFx World, just a few words about us. We are an international company organizing conferences and webinars and expos for Forex traders since 2009 all around the world in Europe and Asia. So probably some of you have already participated in our offline events. And if so, please let us know in the chat. We will be happy to see our participants here at this webinar now. So starting with the pandemic, we shifted to webinars, and our main focus was Malaysian traders and Malaysian audience. So we organized webinars for Malaysia every 2 weeks. And this is the first time when we decided to organize an international webinar for all of you in English with our special guest from Singapore, Karen Fu. So I'm sure that there are some of you right now here, not only from Malaysia, but from Europe, Canada, South Africa, probably from other countries as well. As far as I know, there were even some registrations from the USA, from New Zealand, from Australia. Although in New Zealand and in Australia, it's very late right now, but hopefully there are still some of you who decided to stay up late in order to receive a portion of trading knowledge. So please, guys, share in the comments where you're from, and we're happy to see all of you here at our webinar. Guys, we have 2 Facebook pages, just to let you know. I will try to do the demonstration of the screen right now. And hopefully I can show you that right here, you can see our ShowFx World page for Malaysia. This is on Facebook. And right here is another page, which is in English. And this is for webinars that we will organize in English with our international speakers. So guys, at the very end, we will drop you links to these pages so that you could subscribe, okay? And follow our future events, okay? And right now, let me mention our answer. Our sponsor of the webinars is Insta Forex. They are a broker with over 7 million clients worldwide and over 40 international awards. Can you imagine this? At the end of the webinar, we'll tell you a little bit more about Insta Forex services. And probably one of the most pleasant parts for participation for all of you is, of course, our prize draws and giveaways. And today we've prepared for you a whole variety of prizes. First of all, any of you will have a chance to get a 20, 40, 60, 80, or 100 US dollars trading bonus. And this will be in the middle of the webinar. So please don't miss it. Stay there and stay tuned during Karen's presentation, okay? And of course, at the very end of the webinar, there will be a special quiz from Insta Forex, where 3 lucky ones, well, of course, not only lucky ones, but those who have some trading knowledge, of course, because you have to answer some questions. The winners will get 1,000 US dollars, 2,000 US dollars, and the special double prize Huawei tablet and Huawei earphones, okay? 1,000 and 2,000 dollars are, of course, trading bonuses. And also, there will be some extra prize at the end, which is a surprise. And any of you can get this prize, but what it will be and how you will get this prize, you will know at the very, very end. So your goal tonight is to stay tuned till the very end, okay? One important announcement before I go on and announce to you our presenter for tonight. One small announcement, guys. So when you write messages in your chat, please make sure that there is a setting that says to all participants and to panelists, okay? So you can choose either only to panelists or you can choose to all participants and to the panelists. So please choose option to all participants in your chat, okay? And now let me introduce you to our teacher tonight. It's Miss Karen Fu, and the story of her success has inspired thousands of traders. She got the title of Best Trading Guru in Singapore at Traders Awards in 2019. She also was called Top Popular Analyst in Asia. And also she became #1 in Singapore nationwide Forex trading competition, as well as in many other trading competitions that she took part and won. And she's also a co-author of multiple investment books, and she has her own YouTube channel with over 100,000 subscribers, where she shares her trading knowledge with everybody. So please welcome Karen Fu. Hi, Karen. Are you there?
Yes, I'm here. Can you hear me?
Yes, I can hear you perfectly. So I'm passing the floor to you now.
All right, so let's start with the presentation. Okay, so welcome guys to this presentation where I'm going to share with you how you can trade just like the professional traders. Okay, so I assume that most of you here, you are beginners. Am I right to say that? You're beginners, and hence I will be going slowly so that I don't confuse some of the beginners. Okay, so thank you, Anna, for your introduction. So this is what she talked about just now. And these are some of my background. I graduated with a degree in banking and finance from NTU in Singapore. And I joined a couple of competitions. I have been joining local Singapore competitions and also international competitions. So I've been ranked #1 in a Singapore competition and also ranked #10 in an international competition. Okay, so these are some of the awards that I've gotten as well along the way. And these are some of the past speeches that I've made in Singapore. Okay, so if you are in Singapore, you will be able to attend. And these are some of the, and these are some of the events I have done in Malaysia, Vietnam, and also Thailand. And these are some of the media features. This one, wait, let me just find my pointer. This one is from a TV channel in Singapore. It's called Money Mind, Channel News Asia in Singapore. And I've been featured in some other documentaries and also radio, newspaper as well to, just to share my experience and all that. And this is another feature, magazine feature. So just want to give a shout out to ShowFx, especially Anna and her team for inviting me over the past few years, because the thing is, they organize really great events. So if you can, make sure you follow their Facebook page so that you get updated on when is the next conference going to come, and then you can come join it. So these events are free of charge. And because of COVID this year, we are doing it online. So that's the good news. We open it to everybody to attend. Okay, so thank you, ShowFx, once again for inviting me this year. And a little bit about my family background is that my parents, they are stock investors. So ever since I was born, my mom and dad, they are already investors. And once in a while, they would trade, but most of the time, they just invest. So this is my mom over here. And she, of course, I'm grateful that she came to my graduation ceremony. And my dad is also a stock investor. So my family, I also have, okay, I don't want to make the story too long, but I have a stepfather. He's also a stock investor. So right now, I'm helping them, analyze stocks once in a while when they ask for like stock tips and all that. Okay. And back then, when I was studying in finance school and also after graduation, I went I was invited to many different investment banks, not to work there, but I was invited to tour their trading floors, to talk to the traders there, and also, just to look at how their trading desk looks like. And it's pretty interesting. Some of them have 6 screens, some of them have 2 screens, some of them have 3 screens. Personally, I use 2 screens, and I started with Bloomberg Terminal, but right now I try to make it simple. I use TradingView as well. I use MetaTrader 4 as well, and I'm still using Bloomberg as well. So I use a bit of everything, okay? But I try to focus more on the Bloomberg Terminal because that is what gives me the most amount of useful data and information. So if you don't have a Bloomberg Terminal, it's okay. Later on, I might share with you some resources which are free, okay, which are free, that you can use to look at your economic indicators and also your fundamentals data. Okay, by the way, if I'm going too fast, let me know, because I know some people, English is not their first language, neither is mine. So I will try to slow down if I am going too fast. Okay, just let me know in the chat. No, you're not going too fast? Okay, then I'll continue with this pace. To those who come from other countries, thank you for joining me. I will try to do my best in this 1.5 hours to give you as much as I can. Okay, so let's move on. So whatever that I'm sharing with you today, understand that it's not meant for you to trade live. You need a lot more information because this talk is just 1.5 hours, but it is a good kickstart for you as long as you follow what I teach you today. So if you want to trade just like the professional traders, you need to follow this sequence. Step 1, step 2, step 3. You cannot skip the first step. You cannot skip the second step, because one thing I realized, the difference between professional traders, by professional traders, I mean like hedge fund traders, bank traders. The difference between professional traders and retail traders, a lot of retail traders, is that retail traders, they tend to just focus on one thing. Most of the time, it is technical analysis. And also most of the time, it's just one time frame. It's just like you're trading in a bubble. You know what I'm saying? So today, if you want to become a professional trader, I need you to think differently. Okay? Think differently. The keyword is think differently. So I need you to learn with an open mind. So when it comes to professional hedge fund currency traders, a lot of them follow this process or strategy called macro trading. So basically, you are looking at, okay, let me just find my pen over here. You're looking at macro economics. Okay, sorry for my writing. Macroeconomics to make your trading decisions. You know what I'm saying? So the first step you need to take is to look at these 2 things: sentiment and intermarket analysis. In other words, you gotta look at the broad market view. Gotta look at the big picture. You know what I'm saying? So what is the big picture story right now? Can you tell me? In 2020, 2021, every single day you hear it in the news. Every single day it's like repeating. On your Facebook timeline, the news is the same thing every single year, every single day. Pandemic, right? COVID-19, market crash. Yes, correct. Thanks for the answer, guys. Pandemic, so that's the big story news. Okay? Of course, big story news can also be many things, like trade war, can also be election. Basically, what everybody is talking about today, that is so-called the broad market picture, the big picture news. Okay, so a lot of retail traders, they don't understand sentiment and intermarket analysis. So this is what I'm going to talk about today. So because a lot of you are beginners, so I'm going to go slowly one by one. For those who are experienced, you take this as a refresher. Okay, refresher. Okay, let me just move on. First thing first, let's talk about sentiment analysis. Can you tell me what is sentiment analysis. Like, what is it? A lot of retail traders don't really know this. Like I said, they only look at charts, which is important. Charts is important, but sentiment can tell you a lot of things, and it can help you generate really, not to say easy, but really good trade ideas. Okay, later I'm going to show you some examples. Okay, let me look at the chat. Fear and greed. Do you mean fear and greed? Fear and greed? Yep, fear and greed. So to put things in simple, fear and greed. So basically, you are looking at the positioning of the traders. You want to identify the positioning of the traders based on what? Oopsie, let me just write this. Based on what? Based on whether traders, are they bullish right now or are they bearish right now? So in other words, when do traders become bullish? When they are optimistic. You know what I'm saying? Like times are good, everything is going well. Then when are traders bearish? Most of the time when they are bearish, they are fearful. Of course, it depends on what asset class it is, right? But this is the general idea. When traders are bullish on something, they're optimistic. When they are bearish on something, then they are fearful. So you need to understand one thing. Markets don't trade in a bubble. It doesn't operate in a bubble. It's not like, okay, stock market, I do my own thing, I move the way I want to move. Then commodities market, okay, I move the way I want to move. I don't care what the stock market is doing. Currency market, I move the way I want to move. I don't care what the stock market is doing. No. Sometimes stock market can move currency market, sometimes currency market can move commodities market, and then causing stock market to move. So I need to understand this thing called capital flow. Capital tends to flow from low risk to high risk, then sometimes medium risk, but basically low risk, high risk, low risk, high risk. Because if you look at, you know, this thing called economic cycle, if you study economics, how many of you study economics in school? If you didn't study, it's okay. Let me give you a quick graph. Let's say this is percentage real GDP. Basically, it's a measure of economic growth, okay? And this is time. Does our economy always go up in a straight line? No, right? You know that during a pandemic or recession, it goes down. So good times doesn't last all the time. This is an economic expansion. Then it goes to recession, economic downturn. Then it goes back to expansion, recession, expansion, recession. Because this is how the economic cycle works. So capital will tend to flow from low risk asset to high risk asset to low risk asset. You know what I'm saying? So during a recession, when other people are panicking, last year I did told people buy this, buy this, buy this, buy this. I don't know how many people listen, but those who follow me probably took action. Last year I told people buy this, buy this, buy this, because during a recession, there are certain assets that is going to go up. During good times, certain assets is going to go up. In other words, whether it is recession, whether it is good times, there are some things to buy. Don't be like the typical retail trader investor. Okay, I'll only buy when times are good. You know what I'm saying? You got to think in terms of recession. Okay, I'm going to buy this set of assets. Good times, I'm going to buy this set of assets. And today, if I teach you what are the assets that go up during good times, what are the assets that go up during bad times, then you know what to buy and sell. Okay? Cool so far? Follow me so far? Or am I talking too fast? Remember, capital flows from low risk to high risk, low risk to high risk. Make sure you write this down, the economic cycle. Okay, economic cycle. The economy goes from, okay, let me just find my pointer. Goes from expansion, meaning it's going up, okay? And then when it's going down, recession, right? So it's go up, down, up, down, up, down. Okay, so when economy is going through an expansion, then of course capital is going to flow to high risk assets. Okay, when economy is in a recession, capital is going to flow to low risk asset. So low risk assets is going to go up. So then the question is, what are the high risk assets? What are the low risk assets? Okay, so I will cover this right now. Okay, right now. So if you study finance, you'll come across these two terms in the finance textbook. Okay, it's called risk on and risk off environment. Okay, so what is risk on? Risk on. Imagine if you have a switch, you turn on your risk-taking ability, if I'm making sense. You have a switch, right? Turn it on. If I turn on the switch, means I'm going to take more risk now. If I turn off the switch, means I'm not going to take risk now. Okay, to put it simply. So, during a risk-on environment, people are optimistic, right? So when people are optimistic, they want to take more risks. Okay, and their main focus is, I want to grow my capital. I want to make more money. So during good times, what are the assets or markets that is going to go up? What are the assets? Look at the box over here. Equity stock market going to go up. Derivatives. What are derivatives? Do you know what are derivatives? Example, futures and options. Okay, futures and options. During good times, of course, there are markets that will go down, right? And they are the safe havens. So safe haven will sell off, meaning it's going to go down. And then in good times, there are certain type of bonds that is going to go up. So a lot of people think that, okay, when times are bad, let me just buy bonds. But make sure you buy the right type of bonds. Because if you buy bonds that behaves like the stock market, for example, corporate bonds, high yield bonds, it's going to go up. Okay? So you need to understand high yield bonds, it kind of behaves like stock market. So during good times, it's going to go up. During good times, you see people flocking to emerging markets because it is kind of higher risk, considered relatively higher risk as compared to countries like US. Another type of asset class that is going to go up, what is it? High yield currencies. Okay, high yield currencies. Make sure you take this down. If you are not writing notes, then you take picture if you want to, because I know that this is how most people take notes nowadays. Okay. Can I move on to the next slide? Okay, what is high yield, low yield currency? Later on, okay? Slowly. I know that a lot of beginners here, so I'm going to explain everything. Make sure that you understand, okay? I got you, okay? I got you. Don't worry about that. Okay, I move on. I'm reading a chat, okay? Okay, let me just move on. Okay, let me just move on. Wait. Risk on environment. Right now, risk off environment. Like I said, turn off the switch. Turn off the switch, then we don't take any risk. It's not we don't take any risk, but we take less risk. So during a risk-off environment in finance, it means that people are pessimistic, they are risk-averse. So their goal is they want to preserve their capital. Okay, I don't really want to grow my capital. I just want to protect what I have. Okay, I want to protect what I have. During bad times, what is going to go up? What kind of market is going to go up? Money market funds will go up. Gold is going to go up. Risk assets is going to go down. US Treasuries gonna go up. Low yield currencies gonna go up. Of course, if you're talking about stocks, later I'll give you examples of what kind of stocks is going to go up. Okay? Follow me so far? What are high yield, low yield currencies is the next slide. Follow me so far. Okay, I'll just move on. If you don't understand, later Q&A, we talk more. What are high yield, low yield currencies? So some people would categorize high yield currencies as commodity driven currencies because it's kind of like the same thing but also a little bit different. Example, Aussie dollar. Example, New Zealand dollar. Example, Canadian dollar. Why do they call this commodity currencies? Why? Because they are currencies in which their country export commodities. So what does Australia export? Mainly, Australia export a lot of things. They export things like gold. They export things like iron ore. They export things like copper. Okay, these are the main few exports. New Zealand, what do they export? They export more of soft commodities. Example of soft commodities. Example. Later I'll look at a chat. Canada, what do they export? Mainly oil. In fact, they have the top 3 oil reserves in the whole entire world behind Saudi Arabia. Okay. Another thing that they export is of course gold. But if you're trading Canadian dollar, please look at oil prices. And if you're trading Aussie dollar, look at gold prices. You can also look at iron ore. So if you want to trade like the professional traders, one very important thing is to understand the fundamentals of that currency that you're trading. So a lot of traders, retail traders, when they trade a currency, they don't understand how the country works, what are their economic policies, what are their political environment, what this country exports, what does this country import, who are their trading partners. All of these things you need to know if you want to become a successful long-term macro trader, just like most hedge fund currency traders. You know what I'm saying? Understand? Let me repeat one more time. A country's trading partners. Second thing, what do they export? What do they import? Okay, these 3 things are very important. Okay, so let's move on to low yield currencies. So during bad times, low yield currencies is going to go up or go down. During bad times, it's going to go up. Okay. So that's why some people call it safe havens, because during bad times, capital is going to flow to safe havens. Now, what are high yield and low yield? Basically, it is the country's interest rate. Now, Aussie dollar used to have super high yields, but recently it has gone down a little bit. But right now, if you want to look at higher yield currencies, it will be Canadian dollar and New Zealand dollar. Okay, so if you compare Aussie dollar with currencies like Swiss franc and yen, it would still be relatively higher yield. Okay, because you know why? Switzerland, Japan has negative interest rates. Australia doesn't even have negative interest rate. So if you compare these two, Aussie dollar is still considered higher yield, even though the interest rate has been cut so much over the past few years. Okay? Follow me so far? Dollar. Is it a safe haven? Yes, it is still considered a safe haven, but after 2008, due to QE, after 2020, due to another few rounds of QE, the safe haven status has decreased and decreased and decreased and decreased. But is it still seen as a safe haven? Yes, but not as much as before. So if you have to compare which currency is a stronger safe haven currency, that would be these two as compared to dollar. Okay, follow me so far? Okay, guys, thanks for your response. If I'm going too fast, let me know. If not, then I will continue. Okay, so one very interesting way for you to measure sentiment is to look at volatility index, or to put it in short form, VIX. Okay. So during 2020, what happened was that VIX spike. So one thing you need to understand, the higher the VIX, the more fear is there in the market. Okay. So what kind of number would be considered, okay, people are very, very scared right now. People are complacent right now. What kind of number? There's no exact number, but to give you a general guideline, when it's below 20, people are complacent. When it's in between 20 to 39, people are starting to become scared. When it's more than 40, people are panicking. Okay, so this is one of the ways in which you can measure sentiment, whether people are scared or not, or are they optimistic, or are they just somewhere in between. Okay, now another shortcut way, so-called shortcut way to measure sentiment is just look at the stock market. The stock market. When the stock market plunges down, it tells you that people are scared. When the stock market is going up, it tells you that people are starting to become optimistic. If you overlay the VIX chart with the S&P 500, you will realize that they tend to be inversely correlated to each other. Now, one thing I need to tell you about the stock market is this. Last year, in between March 15, I think it's somewhere around March 12, March 15, I don't remember. March 12 to March 25, 2020, which is somewhere around here. I told people, buy the stock market now. I even told people, buy this stock. Okay, Amazon, I buy this stock. I did a whole video on it on YouTube. Then I also post on TikTok, which is maybe it's the wrong place to post, but the main thing is I posted on YouTube. Buy this stock, buy this stock, buy the stock market, buy this, buy this, buy this. It's not a recommendation, it's just telling people what I'm doing. And then there are some people who are like, Karen, you know, we're at the start of the pandemic. What are you talking about? Even analysts, some analysts are saying that the stock market is going to continue to drop. If you tell people to buy here, it's going to continue to drop all the way down and down, down, down. Okay, I told people to buy, despite the fact that people are saying that it's too early to buy. If you look at this video, you can go and Google it on YouTube after this webinar. This is the title. Watch this if you want to get, okay, a little bit of clickbait. Watch this if you want to get rich from market crash. And I guess that was slightly before, which is over here, slightly before the market U-turns. 1 week later, the market U-turns. A lot of people did not take action because you know why? Because you know why? People always wait for the economy to recover before they say, okay, now then I will buy the stock market. You need to understand this one thing. Okay, in fact, two things. First thing is that stock market is the leading indicator. Leading indicator of the economy. Okay? In fact, it leads the economy sometimes 6 to 12 months before the economy recovers. So by the time you wait for the economy to recover, the stock market already go up, it's too late. And the second thing, when the stock market free falls during a recession, okay, so bear this in mind so they can prepare for the next recession because it doesn't come that often. When the stock market free falls, it falls very fast. It falls without a parachute. It just jumps down without a parachute. But when the stock market climbs up, it's going to take the stairs, take my time, slowly take my time. Do you see that? Do you see that? Yeah? So the point is that you cannot wait. You cannot wait. By the time you wait until economy recover, already go up, already too late. You know what I'm saying? So you gotta, like what Warren Buffett says, be, what's his quote again? Be optimistic when people are fearful, something like that. And be fearful when people are optimistic. Okay? So this is the video if you want to check it out. It's already over, but it's still there. Okay? So a couple of dislikes there. Not nice, not nice. Okay, so like I said, if you overlay the two charts together, S&P 500, okay, this is S&P 500 with VIX. They are inversely correlated with each other. Do you realize that? Inversely correlated meaning? What is inversely correlated? Meaning they move in the same direction or opposite direction. They move in the opposite direction. Very good. Okay, very good, guys. Thanks for your answer. Opposite direction. If we go all the way back, this how many years ago? Calculate a bit. More than 10 years ago, okay? More than 10 years ago. Stock market dropped in 2008, right? This is what I shared with the ShowFx live event, I think in 2019 when they invited me. It's a free talk also. I told people, okay, VIX is going to spike up, stock market is going to go down. Same thing, you see? Stock market plunge, VIX spike up. You see the same thing again and again in all the past recessions. Okay? Now, how about if you compare a currency with VIX? If we go back to 2011, what happened in 11th of March 2011? What a nice number. What is that? Fukushima earthquake. Fukushima earthquake. Now, a lot of people are very confused back then. Okay, Japan has an earthquake, okay? So, yen should go down, right? But then instead of yen going down, instead of yen going down, it went up. People are buying up yen. Why is that? Okay, first thing first, during the earthquake, people are scared, so VIX spike. Okay, of course, there are many reasons. VIX spike. So dollar yen went down because yen is the counter currency that people have been buying. In fact, it went down by more than 40%. You see this massive spike over here? More than 40%. People are buying yen as a form of safe haven. So a lot of times, this one example, when you see VIX spike up, people are going to, oh my God, let's go to buy yen. Of course, there are a lot of things they're going to buy, but yen is one of those safe haven assets that people are going to buy. So you need to understand that a lot of times, the global macro picture, which affects sentiment, is going to override the economics fundamentals of the country. Of course, the earthquake affected Japanese economy, right? Yeah, so yen is supposed to go down, right? But like I said, if you have a global macro picture, it's going to override the economic fundamentals. You need to understand this. So when there's no big picture story happening in Japan during normal times, then the currency is going to be affected by fundamentals economic indicators. Okay? Especially when it comes to Japan, look at their trading partners. Look at the trading partners. Okay, so a lot of people will say, some people will say, well, Karen, you know, the recession only comes once every decade, comes one every 10 plus years. Then how do I take advantage of? Do I need to wait so long for me to take advantage of another so-called stock market crash, another currency crash, another commodities crash? You can look at a more frequent event. And what is that? Look at 5 years ago, 8th of November. This is, I would say, predictable. Because if you look at the past many same events, the stock market tends to behave the same way during this event. Do you remember what happened on 8th of November 2016? Do you remember what happened on 8th of November 2016? No? No? Not memorable enough for you? Okay. Maybe he did not make a memorable impression. Yes, Donald Trump election. 8th of November 2016, election. Okay, election. So I also posted about this last year on social media. I told people that this happens. Wait. This happens 1 week before elections. Stock market will go down 1 week before the elections. Why is that? Because there's a lot of uncertainty in the atmosphere. Oh my God, who's going to get elected? Is it this guy or this lady? Okay, of course, last year it was Biden and Trump. Oh, is it going to be Trump, Biden? And if Trump continues to run for another 4 years, to be in office for another 4 years, is he going to change his policies? If he changes his policies, how is this going to affect relationship with China? So there's a lot of thinking, anxiety in the market. So this is one of the reasons in which the stock market tanks 1 week before. If you look at last year, overlay VIX chart with it, same thing. 1 week before election, 3rd of November 2020, look at what happened to stock market. I sold this movement and right after election, bought it back, right the trend. Tell me, is this an easy trade? History, you can learn a lot from it. You can learn a lot from it. And some more VIX spike is already enough to tell you that, okay, stock market is going to continue tanking. You know what I'm saying? How about currencies? If you compare this with currencies, stock market tanked. You pair a high yield currency with a low yield currency, you will have a currency pair that moves in the same direction as the stock market. Remember, our Aussie dollar is our high risk currency or high yield currency. Okay, and our yen is the low yield currency or the safe haven. So if you want to trade sentiment, you're gonna pair a high yield currency or a high risk currency with a low risk currency. You cannot pair like high risk then with another high risk, then it's kind of complicated. High risk with a medium risk, then it's also kind of complicated. You want to pair complete opposites together. Okay, so one example is Aussie yen. So Aussie yen, a lot of currency traders don't know this. It is a risk barometer. It also tells you whether are people fearful or whether are people optimistic. Okay? Follow me so far? Okay, let me move on. Later on Q&A, hopefully we have Q&A and then I'll answer all your questions if I can. Okay? Okay, let's continue. Of course, another way that you can look at sentiment is to look at COT reports. So if you don't know where to find, you can go to this website. Okay? And of course, there are lots of components when it comes to the COT reports. Okay, you will see these two columns, commercial and non-commercial. So if you look at who are the participants in the forex markets, you have a lot of people who are participating in the currency markets, right? So you have examples like companies, and then you have people like hedge funds. Of course, you have retail traders. Of course, we also have central banks. Of course, we have brokers, retail brokers, and brokers for hedge funds. So when you go to COT reports, you need to focus on the non-commercial positions. I'm not going to go into detail, but you need to focus on non-commercial positions because you want to look at what the hedge funds are doing. Because commercial positions refer to companies. So companies, they participate in the forex market to hedge. Okay, to hedge. So normally they use futures to hedge. Because if you're a company, you have international offices, okay? And you make international transactions. If you make a profit overseas, but then you convert back to your own local currency, but if your own local currency is not going in your favor, then the profits are going to be wiped out because of the currency rate differential. You know what I'm saying? So that's why companies need to use currencies to hedge. Okay? Right, now let's focus on inter-market analysis. Just now I showed you a couple of examples. Later I might show you a lot more. We're going to compare stock with commodities, US dollar index with stock market commodities. Okay, but for those of you who are confused just now, what is inter-market analysis? Basically, you are using correlations between different markets to determine this is the keyword. This is the keyword. The long-term direction. Okay, to determine the long-term direction. Understand that correlations play out better in the higher time frames. Okay, so one thing about hedge fund traders is that you don't see them looking at minute time frames, then day trading the currency markets. So what a lot of them do is that they will do position trades or swing trades once in a while, but never be like day trading, making tons of trades every single day. Unless you're talking about high frequency trading, that's another thing, because those type of trading, they would have a lot of open trades every single day. But if you're talking about macro trading, you look at higher time frames, and correlations only play out in the higher time frames. If you look at a small time frame, you realize that the relationship is not really that consistent. You know what I'm saying? So look at higher time frames. Look at higher time frames. Meaning, don't look at the minute time frame. It's too small, too noisy. I personally also don't like that kind of time frame, minute time frame. Okay. Another way to name intermarket analysis, some people call it cross-market analysis, some people call it cross-asset analysis. It's the same thing, okay? Why do you need to conduct intermarket analysis? Because, like I said just now, nowadays markets are interconnected. And also, if you have observed just now, a lot of the markets can give you a clue, meaning they are leading indicators. So it's like the market giving you a free signal. You know what I'm saying? So you don't need to rely on anybody to sell you a signal, or you don't need to buy signal from anybody. You just rely on what the markets are doing and then use that. Okay? Cheaper, right? A lot cheaper, right? In fact, it's free. So when you conduct intermarket analysis, you can ask a couple of questions. Is the collision caused by an external factor? Did the collision prevail in the long term, or is it a short-term coincidence? Is the collision sustainable? Does the collision make sense? Does one factor cause the movement of another correlated factor, or vice versa? Give you one example. I give you one example, you tell me, does this correlation make sense? And will this correlation last in the long term? Okay? So let's take last year and this year. Something interesting happened last year and also this year. Of course, you already know. Let's put x-axis as time. What product sales went up last year? What product is selling like hotcakes since the start of last year, March? What product is selling like hotcakes? Maggie mee. I don't know about Maggie mee, but sanitizer, okay? Yeah, maybe Maggie mee sales go up too. Mask, yes, mask. Hygiene products. Some of the products I don't know, okay, whether the sales go up or not. Bread, I don't know whether bread goes up or not. Gloves, definitely, yes. Board games, definitely, yes. In fact, statistics have shown that sales went up. Okay, so a very common answer, laptop, good one. Okay, Bitcoin, yes, people bought Bitcoin too. Udemy courses, pets. Okay, so interesting answers. But the main one is, okay, let me just find my pen again. Okay. The main one is mask sales, right? Mask sales. So another thing that goes up, another thing that went up, yes, Zoom. Of course, more people are using Zoom, online shopping, yes. And also, I actually got this from a Singapore documentary. It's like a TV show kind of thing. I don't know what you call that. But they did a pretty long documentary, and then I watched the whole thing. I don't know why. Because it's very interesting. They said that the usage of plastic has went up. Okay, you know, your Tupperware, all that. People are buying more takeouts. They're ordering takeouts. I don't want to go out and eat. I just want to eat at home. You know, like in Singaporean terms, they call it tapao. Okay, you tapao and eat at home. Yeah. So you gotta tapao you gotta have your plastic, then Tupperware, all that, right? If you don't recycle. Does this correlation make sense? Let's say if pandemic goes away, hopefully it does, okay? If pandemic goes away this year, let's activate law of attraction this year. If pandemic goes away this year, end of this year, and then all of a sudden, out of nowhere, plastic sales go up, it surge. Does this mean that mask sales is going to also go up? Does it make sense? Pandemic is over, all of a sudden, plastic sales go up. You see the graph, you plot the graph, both move up at the same time, right? So it seems like it is positively correlated, right? But like I said, ask these questions. Does the correlation make sense and will it last in the long term? If it doesn't make sense, it's not going to be sustainable. Agree with me? So this one example in which the correlation doesn't make sense and hence it's not going to last. Okay, make sure you ask all these questions when you look at a graph, two graphs together. You can ask yourself all these questions. So when you look at intermarket analysis, of course, you can visually like what we do just now. Okay, if these two graphs move in the same direction most of the time, then it is positively correlated. If it moves in a negative direction most of the time, then it is negatively correlated. This is called visual interpretation. Okay, so for those of you who are math geeks who want something more certain, you look at correlation coefficient, or you can look at the percentage. Show you one example. So you can go to this website. It's called My FX Book. You can just follow this My FX Book, Forex Market Correlation. Okay, so every day they'll post correlation numbers. Of course, you can try other websites too. Don't have to use this. They'll post their correlation up. So how do you read this? Let's take Aussie yen with Aussie Swiss franc. What does this mean? 97.5%. This means that 97.5% of the time, these two currency, Aussie yen, Aussie Swiss franc, is going to move in the same direction. And 2.5% of the time, the relationship will be random. Okay? So if it's negative, if it has a negative number, it means that it is negatively correlated. Okay? Then the rest of it, 100 minus 4.4% is random. Relationship is random. So you gotta look at those pairs that has a high correlation. You cannot just look at everything. Oh my God, it's going to take you forever, right? So look at those with strong positive correlation and strong negative correlation. So what is considered strong? What number is considered strong? Let me just rub this off. What number is considered strong? Okay, some people say 95, some people say 80, 90. Okay, so I'm gonna give you this guideline, okay? When it's more than 80% or negative 80%, then it's considered strong, okay? So if it's more than 90%, then it's considered very strong, okay? 90% or negative 90%. Okay, so just focus on those which has 80 and 90 lah, you know, like all these. And also understand that correlations change over time. Doesn't mean that, okay, if all the time it is positively correlated, then forever it's going to be positively correlated. Okay, doesn't mean that if it is negatively correlated today, then forever it's going to continue to be like that. It's not. But with that said, correlations don't change every day. It cannot be like, okay, positively correlated today, then tomorrow negatively correlated. It might take a couple of decades for it to change. It wouldn't change overnight. So that's the good thing. So you don't have to check every day. Oh my God, is it gonna change today? It's gonna change tomorrow. Also very busy, right? So that's the good thing. Correlations, whether it's positive, negative, doesn't change that often. Of course, the number is gonna shift a little bit every day. Maybe sometimes it's gonna be 96%, sometimes it's gonna be 98%, then 91%. But it's not gonna go from positive then to negative overnight. Okay? Okay? And you realize one more thing is that no two asset classes are perfectly correlated to each other, meaning that 100% it moves in the same direction all the time. All the time it moves in the same direction. No asset classes, no two asset classes move in the same direction all the time. No two asset classes move in the opposite direction all the time. Okay? Of course, why is this 100%? Because it's the same currency. Yeah, it's the same thing. Aussie, New Zealand, Aussie, New Zealand. Okay? For me so far. Okay, so I'm going to give you a couple of examples. So the main gist of intermarket analysis is that if you're a currency trader, let's say if all you trade is euro dollar every single day, you cannot trade in a bubble. Okay? You're going to look at other currencies. And if you're a currency trader, you also must look at commodities. Because commodity, when it moves, it's going to drag certain currency pairs with them, and it's going to move first. It's going to move first. So it's like a signal for you, leading indicator. If you're a currency trader, also look at bond market. If you're a currency trader, also look at stock market. So it's kind of a lot of work to do, right? But you know what? Who are the profitable traders in this world? The hedge fund traders, professional traders, right? So if you want to achieve their results, you're gonna look at what they look at. Remember, most retail traders only focus on technical analysis. And the worst part is that a lot of, not everybody, but a lot of educated finance firms, what the hedge fund traders do, you know, so you know, every single video just talk about, look at my Lamborghini, which I bought by using Forex, by using my stock market, but not my stock market, using the stock market. You know what I'm saying? You know those videos? Like on your Facebook timeline, Lamborghini, and then like, it's either Lamborghini or mansion or something, so flexing all the time. These are people who teach technical analysis. Anybody can teach technical analysis, but you need somebody with a finance background who understands the importance of. You know what I'm saying? If you go and look at who are the professionals who teach trading on YouTube, on social media, you realize that they talk about fundamental analysis. If not, you go and try. Go and see who are the people with finance background who work in investment banks. They are going to tell you, why are you looking at technical analysis? Yeah? And why do retail traders don't look at intermarket? Because it's, oh my God, Karen, you look at so many things, right? Commodities, then you look at currency, then compare with other currency compare with stock market. Are you willing to do the work? Are you willing to do the work? If you're willing to do the work, then you'll become a successful trader, professional trader. And also, aside from bond market compare with stock market, other currency compare with stock market, currency compare with stock market, also compare commodity market with stock market. You need to know their relationship. Are they positively or negatively correlated? Okay, so I know it's a lot of things, but take it one at a time. Take it one at a time. Maybe on the first week or first month, you just study this relationship. How is commodity related to bond markets? How will the commodity market move the stock market and vice versa? You know what I'm saying? So maybe next month, then you focus on another thing. How does my currency relate to other currencies? Okay? It's not going to be overnight to understand all this, but once you learn all this, you will thank yourself. You will thank yourself. Later, I'll give you some examples because we have a lucky draw, so I hope you win some good prizes for yourself. Okay? So I'll hand it back to the organizers for them to present you the lucky draw, and later on I'm going to give you some examples and chart examples and all that so that you get a clear picture on how to compare these different markets together. Okay, so talk to you later.
Okay, thank you, Karen. And now, guys, we'll have a short but very, very pleasant break for you because some of you guys will get trading bonuses from Insta Forex right now. So let me do the demonstration of the screen. And I will ask Karen to turn off her demonstration of the screen, please. Karen? I'm sorry, guys, because I cannot do mine until, oh, right now I can. Okay, perfect. So here, guys, you can see that we have already downloaded your emails in our drawing machine, okay? So now, let's find out who wins $20 bonus from Insta Forex. And the wheel is turning, and we will now get the winner. Who is the winner? Okay, Raghuvaran Pushpanathan at gmail.com. Okay, congratulations. You get $20 bonus. And now we will find out who wins $40 bonus. Okay, $40 bonus goes to Idris4373 at gmail.com. Our congratulations. And now let's find out our winner for $60 bonus from Insta Forex. Okay, $60 bonus goes to Terrence28282 at gmail.com. Our congratulations. And now $80 bonus. Who gets the $80 bonus from Insta Forex? Okay, it's Putrasha701 at yahoo.com. Congratulations, sir. And now our final winner, who gets the biggest bonus, who is the luckiest tonight. And $100 trading bonus goes to Abdul Rahman 1978 at yahoo.com. Congratulations. So once again, right here, you can see all the winners. We will contact you guys. We will contact you and we will let you know how you can get your prize, okay? And now we are back with Karen for the second part of her presentation. Karen, are you here? Okay, Karen? Just wait a little bit more. So far, I want to congratulate once again you guys, everybody who has won the bonuses. We will contact you and we'll tell you how you can get your bonuses. And there will also be a big quiz at the end, so please don't miss it. Stay till the very end. And the winners of the quiz that will take part at the end of tonight will have a chance to win $1,000 trading bonus, $2,000 trading bonus, or Huawei tablet and Huawei earphones. Okay, so please stay tuned. Plus, there will be also another surprise at the very end. There will be one more prize that all of you can get. And I will tell you at the very end how you will get one extra prize for yourself. So please, guys, stay tuned. Thank you all for coming. Karen, are you there?
Can you hear me, Anna?
Yes, I hear you perfectly. Okay, I'm giving the microphone to Karen, guys. See you back soon.
All right, guys. Okay, thank you, Anna, for the lucky draw 10. Congratulations to those who won And just want to mention one thing is that Anna, she has been doing a good job over the past few years organizing these free events for you guys. She worked really hard with her team behind the scenes. So we gotta thank Anna for her hard work, because without her, all these free talks, free events won't happen. Okay? They work really hard, I'm sure, to get sponsors and then to get speakers, and also to, you know, do all the admin stuff is not easy for them. So they still managed to pull off a good event. So we gotta thank ShowFx team. Okay. So like I said just now, I will give you some examples. So first thing we compare is currencies with the stock market. So like I showed you just now, okay, wait, let me just change my, okay, like I showed just now, Aussie yen and S&P 500, it tends to move in the same direction most of the time. So you can see that when the stock market tanked in March 2020 and then recovered at the end of March, Aussie yen, what did it do? It followed suit. You can see even small movements like this retracement, S&P went down as well. Aussie yen goes down, the S&P 500 also goes down. Okay, so most of the time you see that it is positively correlated. If you compare euro dollar with S&P 500, you see the same thing happening again. Okay, when the stock market goes down, euro dollar also go down. When stock market goes up, euro dollar also goes up. You need to understand this one thing. Euro is seen as a high risk currency. Okay, and one thing you need to understand is that even though a lot of beginners, they trade euro dollar, but over the past few years after all the Brexit events that's happening, okay, it has become more and more of a political currency. So it's, I would say, more complicated to trade than before, but the good thing is that if you trade euro dollar, the spread is very low and the volatility is not that much as compared to exotic currencies. Okay, follow me so far? I don't know whether the chat is still working, but I'll continue. Okay, so if we compare dollar yen with Nikkei, if you trade dollar yen, make sure you look at the Japanese stock market, Nikkei 225. And you realize what is the correlation between these two? What's the correlation between these two? Positively correlated. Of course, sometimes the correlation doesn't work out, like I said, because no two markets are perfectly correlated all the time. So sometimes you see the correlation inverse, right? But most of the time, you see that it moves in the same direction. So if you're trading dollar yen, make sure you also look at the Japanese stock market. Okay. Aside from S&P 500, you can also look at other types of stock market, Nasdaq 100. So, like I said, if you pair a high yield currency with a lower yield currency, another example would be Aussie dollar. Of course, right now the yields for Aussie, Australia is actually lower than United States. Before a couple of years ago, it used to be higher than United States, but now it is lower than United States. But it is all about investors' perception. People still perceive that Aussie dollar is a so-called higher risk currency. So it tends to still move in the same direction as the stock market. Okay. How about if you compare currencies, commodity currencies with other pairs? So we have the Aussie dollar over here, Canadian dollar over here. You compare it with euro dollar, which, like I said just now, is so-called the high risk currency. So you realize that the base pairs are all the higher risk currencies. Yeah. Look at what's the relationship. Goes down together and goes up together. Even this small retracement over here. Right? So the here is this. Point here is this. If you buy trade, let's say for example in Canadian dollar right now, which is this orange line, okay? But then you go and look at other markets, you switch to Aussie dollar. They are positively correlated. Buy trade in Canadian dollar right now, euro dollar, and Aussie dollar, let's say example, very strong downtrend. So is it a good buy trade? If I'm to ask you this. So you don't use this to generate a trade idea. Okay, if both of these two currencies go down, let me just sell. You don't use this to generate a trade idea and then enter a trade based on this. You use this as a confirmation. Confirmation for your price action, confirmation for your fundamental analysis. You know what I'm saying? So when you add all these confirmations together, it further increases your probability. Okay? What if we compare currencies with commodities? So if you take Canadian dollar, compare it with oil prices. So oil prices is the, okay, let me see carefully. Is it the orange? It's the orange line. It's the candlestick. Okay, doesn't matter. But either one of these is oil or Canadian dollar. But you can see that both of them, when it tanks together. When it goes up together. So one thing you understand is that Canada, like I said just now, is a major exporter of oil. So when oil prices go up, you see Canadian dollar going up, and also vice versa. Okay, remember Canada, one of the major trading partners is USA. Like I said just now, when you trade a currency, you gotta look at their trading partners, because a lot of times when you look at the top trading partner, when USA goes down, you see Canada is going to get affected. It's going to go down with it. Some more USA imports a lot of Canada's oil. So when USA is not doing well, it's not going to import that much. So no customers for Canada, and hence Canadian economy is going to get affected. It's going to go down. Okay. If you compare pound dollar with oil prices, how is the relationship like? First thing first, like I said, understand the country's fundamentals. Okay, what contributes to their GDP? Oil industry in the UK contributes to about 10% of the GDP, of UK's GDP, which is, I would say, pretty significant. So realize that move in a same or opposite direction. Most of the time, it will move in the same direction. So when you are, let's say, selling pound dollar and oil prices is on a very strong uptrend, are you going to sell right now and hold it for a couple of weeks? Because your technical analysis, maybe MACD or something that you use, says so. You see the danger of relying on technical analysis alone? Because if you sell when oil prices are going up, because of your MACD indicator, you're going to lose a lot of money, because oil prices are going to drag pound dollar up with it. And you're going to get stopped up again and again and again. And a lot of traders, they don't know what is happening. What is happening? My technical indicators tell me to sell, but it keeps stopping me out. Is it my broker? Is it a market maker? Is it that the markets are rigged against me? Forex is a scam. Then they quit. Or maybe some traders, this is very common too. Maybe my indicator is not good enough. You know, maybe I need to change indicator. Do you know this hedge fund trader, hedge fund manager, the world's top hedge fund manager, Paul Tudor Jones? Is his so-called indicator strategy perfect? Far from being perfect. His win rate is only 40 to 45%. My win rate is only around this. I would say it is around 40 somewhere, 40 to 45%. Because you know why? What hedge fund traders focus more on is risk to reward ratio. If I lose money, I lose little bit. But when I make money, I ride the whole entire trend. I make a lot in one trade. So my one trade can cover my past 5 or 6 losses. That is why the win rate is so low. But then in the long term, they make more money. You know what I'm saying? I've seen so many retail traders with like a 90% win rate, with like a 95% win rate, but then they still lose money because you know why? That one trade that loses money wiped out all their previous 2 to 3 months of hard work. Is that even worth it? Does that even make sense? But yet this is how retail traders trade. When they lose money, they also, the only thing they think about is what strategy can I use that can give me a higher win rate? It's totally different already. Okay, so like I said today, you got to think like a professional trader. I hope I'm not digressing too much. Okay, let's move on to the next one. If you're trading Aussie dollar, Australia, what do they export? A lot of things, right? Iron ore, copper, and especially gold. So if you pair Aussie dollar with gold prices, you realize that they tend to also move in the same direction. Okay? If you pair the 3 commodity currencies together, will they move in the same direction? You see, our Canadian dollar, Aussie dollar, New Zealand dollar is our commodity currency, right? So see, orange line is Canadian yen. Green line is Aussie yen. Yellow line is New Zealand yen. Okay? When it tanks really fast. When it goes up, it climbs the stairs. Do you realize that they tend to behave just like the stock market? Do you realize that? And if you compare this with the CRB index, which is the commodity index, you realize that it also tends to move in the same direction. So if you don't want to buy the stock market for some reason, you can buy commodity index, and one of which is CRB index. CRB index, what does it track? It tracks energy prices, agricultural products prices, what else? Precious metals. Okay. So it's kind of like the index for commodity markets. Okay. How about if you compare dollar index with commodities? Is it positively correlated or negatively correlated? Oh, sorry, this is gold. This is gold. And then this is dollar index. Okay. If you compare dollar index with gold prices, does it move in the same direction, or is the relationship opposite? Okay, sorry about that. It is gold and dollar index, not stock market with dollar index. Gold with dollar index, negatively correlated, right? Why is that? All the commodities, they are priced in USD. Okay, so when dollar goes down, commodities become cheaper. So when it is cheaper, people are going to buy more, and hence it's going to go up. That's why the relationship is inverse. Okay, so when dollar goes up, commodities become more expensive, and hence your gold goes down. You see that? Even over here, you see the inverse relationship here. What if you compare all prices with dollar index? Same thing. Price in USD, when dollar goes down, oil becomes cheaper, and then people are going to buy more oil. Okay, and then you see the same inverse relationship here as well. All prices go down, and what happened to dollar index? Go up. Okay, by the way, guys, if you don't know what is this software, it is free. Like I said, if you don't have Bloomberg terminal, it is okay. Let me just write it properly. Tradingview.com. Okay, just gotta register, and then it's all free. If you compare dollar index with S&P 500, now this relationship, I would say it's a little bit more complicated, because first thing first, dollar is a safe haven, right? But it's not a really strong safe haven, but still people buy it when times are bad. Okay, but then on the other flip side, when the economy is doing good, it benefits USD, right? So it's like when good times come, dollar is going to go up. When bad times come, recession comes, you realize that dollar is also going to go up. So what is this complicated relationship? So this tend to make a lot of people confused. Agree with me? So you can see that when the stock market dropped in March 2020, dollar index spiked up. Yeah. So a lot of times you see that during recession, dollar is going to go up. Good times, dollar is also going to go up. So when will the dollar go down just like this? Of course, last year there's a lot of QA, there's a lot of interest rate cuts, low interest rate, and hence investors, they go elsewhere to find high yields. Okay. When will the dollar go down? A lot of times you realize that dollar will go down when the economy is in a phase where it is not really in a deep recession, but also at the same time, it is not really in an expansion phase. Like somewhere in between. It's not growing too much. It's not really growing, but it's not really like going down and down and down. So it's somewhere in the middle. So when the economy is somewhere in the middle, you realize that the dollar is going to go down. So in other words, when times are good, by good I mean the economy is growing really, really fast, you can look to buy the dollar. Okay, because fundamentals is going to drive it due to the good economy. But when times are bad, you can also look to buy dollar because of the safe haven status. Capital is not flow into it. Okay, follow me so far. One more thing that currency traders need to look at: bonds. In specific, particularly bond yields. So why are bond yields so important? Because it tells you, first thing first, of course, the demand for bonds, capital flow. It also tells you what's the current market sentiment. Later I'll show you one example. It tells you what is the current risk appetite. You can also use this to measure risk sentiment. Okay, so aside from stock market, VIX, COT report, bond yields is another strategy. So of course, it can tell you future inflation rates, interest rates, economic growth, and also public sector debt. And when you look at bond yields, you can look at this thing called yield curve. Do you know what's that? Yield curve. By the way, to those who are beginners, just a little bit of basics for you, because I know some of you don't have any knowledge in bonds. So when bond prices go up, when the bond price go up, bond yields is going to go down. Okay, so what is this relationship? It is inversely proportional. Okay, it is inversely proportional to each other. So I'm not going to explain each and every one how is it formed, but when you see a flat yield curve or inverted yield curve, it basically tells you that a recession is going to come soon. Okay, so this is a leading indicator. Sorry, indicator. Leading indicator. Okay, why is that? Because normally during recession, inflation rate is not going to be high, right? In fact, sometimes deflation. So investors, they are going to buy what? They are going to buy long-term bonds because of the higher yields. Because of the higher yields to protect themselves from the recession. And hence, this would push the yields down, the long-term yields down. And when economy is going from a recession back to high growth phase. So during a high growth phase, there's going to be high inflation, right? When it's at the end of the expansion phase, it's going to have very high inflation. So if investors perceive that Fed will not be able to control inflation in the future, they are going to buy or sell their long-term bonds. They are going to sell off their long-term bonds because inflation is going to erode their returns. So that's why this tend to push the yield curve up. Okay, so basically, so-called to predict a recession, you just look at these two. Okay, if the yield curve is inverted, it tells you that a recession is going to come soon. And if the yield curve is flat, it also tells you that the economy is going down soon. So to look at the yield differentials, you can go to this website called St. Louis Fed. Okay, St. Louis Fed. And it's a free resource. If you want to look at your economy indicators, you can also go to this website. Okay, if you want to look at the yield curve, you can go to this website. Okay, so you can see that whether is the yield curve normal, or is it inverted, or is it flat. Okay, another website for you, you can also go to stockcharts.com, and this is a little bit more interesting because it's like a simulation, so you can go and play around with it. Now if you look at bond yields with stock, why is this such an important indicator? You see, this is your S&P 500, right? Yeah. So the candlestick is your 10-year Treasury note yield. Okay. In March 2020, when the stock market go down, look at what happened to bond yields. Before that, it starts to move down first. Do you realize that? So bond yields is a leading indicator of the stock market. And the stock market is the leading indicator of the economy. So is this useful for you or not? To so-called predict when the recession is going to come, when the market is going to recover. Yeah? Okay, so like I said just now, during recession, this is just a side note, during recession, certain stocks is going to go up, right? During recession, there are currencies you can buy. During recessions, there are certain types of stocks you can buy. So this is the Dividend Etf, and this is the 10-year Treasury note yield. So of course, during recession, it's going to go down. Treasury note yield is going to go down. Okay, And then dividend ETFs is going to go up because investors, of course, they want to seek higher yields, right? So when the yields go down, they would seek higher yields in dividend stocks. Another group of stocks you can buy during recession that is going to go up are healthcare stocks, and in particularly utility stocks, and also consumer staples. And the good thing about recessions is that market crash is that a lot of the large cap stocks are also going to go down. So it doesn't mean that you need to focus on these three. There are a lot of tech companies, good tech companies, which are underpriced. Okay? And you can go and buy them, the good companies, only the good companies. So like what I shared with you today, sentiment and intermarket analysis, okay, is to look at the broad market view. This is the first step. Second step, you're going to look at the smaller picture. Instead of looking at what is happening all around the world, right now you're looking at what is happening in the country. In the country. So this way you look at the country's economic indicators. And one thing about economic indicators, a lot of retail traders, they look at the wrong things. Still the same thing. If they look at economic indicators, they look at the lagging indicators. So when it comes to economic indicators, you got to understand which are the leading economic indicators, which are the lagging indicators, which are the coincident indicators. Because this talk is only 1 hour plus, I would like to talk more about this, but I'll reserve that maybe for next time. Third step, you apply technical analysis. So what is technical analysis used for? Use this to spot better places to enter. Use this to determine where to TP, where to cut your losses. And then you need a couple more things. You need a couple more things. Aside from these three things, let me just rub this over. Aside from these three things, what else do you need? Aside from these three things, what else do you need? Can you make a guess? Risk management, yes. Summer. By the way, you cannot use technical analysis to generate a trade idea. Okay, so let's say today you decide to skip all the steps, and then your so-called indicators or price action give you a buy signal. But then broad market indicators, economic indicators is giving you a sell signal. What are you gonna do? Do nothing. You want to make sure that all three are giving you the same signal. Okay, so this is how you do like a checklist to increase the probability of your trade. And then you make that one good trade, and then you write the whole trend. So aside from these three, what else do you need? Risk management, trading psychology, and reliable broker. And also when it comes to retail traders, the way they pick brokers is also, I would say, not the right way to go. Not the right way to pick a broker, because most retail traders, the way they pick broker is maybe just two criteria: low, high leverage, and then what else? Small minimum capital requirement. There are about 10 things you need to look at before you pick a broker. Understand what I'm saying? You're gonna take 1 week, 2 weeks, and research properly to pick a proper broker. I've seen so many stories of people coming and tell me, oh my God, Karen, I regret not researching for a good broker because I rush everything. I just want to open a live account very fast, and I skip the research process, and now they refuse to return my capital. I put in $10,000 and they refuse to return my capital. There are so many brokers who cannot or maybe don't want to return your capital because of regulation problems. Make sure you research properly. Okay? So if you want to learn more about fundamental analysis, you want to learn more about technical analysis, I have some courses for you, and are they free or paid courses? Oh, now she's gonna sell me a course, right? Yep, she's gonna sell me a course right now, so don't know what to do about that. Is it gonna be free or is it gonna be paid? They are free and amazing, Jeremiah. I think because he follows me, right? I don't know. Some of my followers here. Okay, to ask you this. Do you want it free or do you want it paid? Now, you know something, okay? I want to tell you this one thing, okay? The reason some gurus, not all gurus, the reason some gurus charge for their courses is because they have tried teaching for free, but they realize that people don't value free stuff, and hence they won't take action on what they have taught them. You know, I have friends who told me secretly, Karen, you know, I teach for so many months for free. Then don't take action because it's free. So free stuff means it's no, cheap stuff means it's no good. But I just want to say that personally, this year, okay, $60,000 just to learn about the financial markets. Of course, my finance degree is included, which the school fees is around $40,000. Then after that, I buy courses, I pay at $1,000. A lot of you, okay, let me just go to the chat. You want it free? If you want it free, you need to promise me one thing. Make the most out of it. Okay? Make the most out of it. I'm quite impressed that these few weeks, I've been receiving messages, from people. They're like, I listened to your free course and I become a profitable trader. Every single week I'm receiving it, because last year, 2020, what I did was that I'm like, okay, so many people lose their jobs. So let me just put out free courses. Just put it out. I don't sell any, I don't do advertisement, I don't do all that. So let me just put out free courses, okay? I spend months and months and months doing all these free courses. Then over time, I start to receive messages. Karen, you know, your free courses help me make money. I'm like, you value free stuff? You mean you value free stuff? Even I'm surprised. But to those of you who don't value free stuff, promise me, make the most out of it. Okay? I spent a lot of months on it. In fact, a whole year on it. Let me just get into it. You want a free courses? Go to this site called YouTube. You need to go on this place. I organize everything for you properly into a playlist. So this playlist is called. So you take your time to go through it. Okay, sometime. Refresh it if you want, and then you can scan here also to access the website. Okay, over time I'm going to add more. It's going to get updated again and again and again. And So what is the catch? There's no catch. There's no catch. I'm the lovely event organizers because they have been amazing. And I also love their therapy. For those with things, I'm just doing it for them. And also for these free courses, I'm doing it just to give back. Just to give back. I've stopped teaching in 2019. By stop teaching, I mean I don't do like upselling of courses in live views anymore because it's not my thing. It's not my thing. Okay, I just want to focus on being a full trader, and that's all I want to do. And once in a while, I'll do these videos on YouTube to share with you stuff for free. Okay, so with that, once again, thank you ShowFx team for having me. And if you want to contact me or my team, or you want to follow me on Instagram or YouTube, you can go and check it out. And with that, thank you guys. And also thank you ShowFx for having me, and have a good day.
Thank you so much, Karen. Thank you for taking part in this event. And you guys take this opportunity to learn how to trade with Karen for free. Don't miss it because we think that's a unique opportunity, and Karen is one of our best speakers. But please, guys, don't go away because there's a lot of interesting stuff that we have prepared for you. So please don't go anywhere, okay? Right now, I'm giving the mic to the Director for Development of Insta Forex, Pavel. Hello, Pavel.
Hi, Anna. Nice to see you. And it's kind of hard to speak after such an incredible performance of the fascinating Karen. So I will try to be helpful. So as Anna have correctly said, I'm a Director for Business Development of Insta Forex. And I have two small parts. The first part is I'm going to talk about the bonuses because everybody likes bonuses. And so I am going to speak about some good things about bonuses and about bad things. And also I will have some fascinating quiz. I'm sure the Malaysians have taken part in our quizzes before. There are very nice prizes, so don't go away. But first, let me start with our bonuses. I will try to be quite short. So let me share my computer first. Second. Okay, here it is. So guys, everybody like bonuses, and this is quite obvious, but to my mind, bonuses. Maybe you remember the song of the singer called Pink, and she had a very nice song. You just like a pill, can make me better, can make you. The same works both with Insta Forex or with any other bonuses can be a good pill. Sick, and you need a pill, it for you. But if you take wrong pill, it works against you. So let me try to give. First of all, very simple advice. No matter if you trade with Insta Forex, if you trade with any other broker, make sure you read the agreement, the bonus agreement. I'm sure I know what you think, but I'm too busy to read. I just want to get. Then you have the problems because you didn't read the bonus agreement. All of a sudden, you understand that you have all the time in the world to speak to your broker, to contact his support team, to find out what's going on, to try to find out what's wrong. So just like with pills, before you take the pill, you take out the instruction and you read it. Here the same. Make sure you read the bonus agreements. And the second advice, if you the Forex, just listen to me, and I will now the good and the bad parts about the bonuses and just to make sure you take the right pill for your trade. So we have type of bonuses. So deposit bonus, which is provided to new clients only. We have the 100% bonus, which is given one time only. So it lasts for 10 years, but you never got it. Bonus 50% bonus given to each deposit. The smartest can ask, why two types of bonuses for each deposit? Why 55 and 30%? Well, if you have this question, this is a very smart question, and to it a beta. Now, let me get back to one of our most controversial bonuses. Some people like it very much, some people hate it, and this is the no deposit bonus. So the first, let's start with the reason people hate this bonus. The reason is very, very simple. You know, this is for new clients only. And here is the real reason. Before the deposit is made, it's purely for training on real account. So it's not, some people are trying to withdraw this bonus. There are people who try to withdraw the profit from bonus. This is not the task of this bonus. The idea of this bonus is to give a new client a chance to trade on real account without risk. So you can, if you trade it with some other brokers and you think, well, maybe I should try with Insta Forex, but it's too risky. I'm not sure if I'm going to risk with my real money. So you can try with this no deposit bonus, try on real account with no risk. And if you are happy, you can make deposit. If you are not, you stop. And here is the outcome. The result on the no deposit bonus trading doesn't matter. After the deposit, the bonus and the profit will be canceled. So if the trader knows this, he knows nobody hates it. Because when you just expect money for nothing, as dire straits used to think, that doesn't really work. But if you want training, that's a great option. But this is not the only advantage. Now we come to the real story. You know, this is for new clients only, and there is a very good saying: you cannot make the first impression second time. So when we get the new client, when the new clients make a deposit, we are trying to make an impression on him. So that's why we are offering the best conditions, which are the following. First of all, we give 100% bonus to each of his deposit before he has $2,000. Like, for example, he makes a deposit of, let's say, $10, he gets $10. Then he makes another deposit of, let's say, $500, he gets another $500. So every time before the deposit is less than $2,000, he gets 100% bonus. And moreover, this is connected with ideal trading conditions. Very low out level, just 10%, and full choice of leverage from 1-to-1 to 1-to-1,000. As simple as this. So that's a real story about the no deposit bonus. So if you are a new client, you can try it. If you never traded with Insta Forex before, but don't expect to get the profit from a bonus. This is just to get you familiar with our trading conditions. And then after deposit, you get the ideal conditions. And another story, after this presentation, there will be a quiz. And the bonuses will be not like this bonus. This will be a kind of VIP bonus where every profit which you make, you will be able to withdraw. So that's why there are only two bonuses to win. So that's how it works. Now, 100% bonus. So this is provided. So if you traded with us before, if you had some other bonuses but never had it, you still can receive it. Secondly, it works for just one day, not for each, and which is less than $2,000. So you can deposit, let's say, 1,000 and you get 1,000. If you deposit 1,500, you get the same amount of bonus. But the bonus is huge, but there are trading limitations. The level is smaller and the stop out level is 100%. So it's totally up to the client what he wants. Either he wants ideal trading conditions or wants big bonus. Two of our most popular bonuses because they are on 55 and 30%. They are provided for each deposit. And as I've said before, you need to bonus in condition limitations. Leverage is quite small, 1 to 200, and stop out level is 100%. And with 30%, you get just 10% of stop out level, and maximum leverage is just anything you can get from our company. So this is actually up to trading strategy of the trader. But here is an interesting story. 75% of Insta Forex clients prefer better conditions rather than bigger bonus. And that actually says that you guys, the Insta Forex traders, are quite smart, because if you choose between something bigger and something less, and you choose less, that means that you take, the Insta Forex clients take some intellectual effort, they do make analysis, and they decide that this works better for them. Now, finally, the question which I get very often in the very last slide, what about something goes wrong? Can I use the bonus? Can I use the bonus in case of capital? Actually, again, everything is and it works all there. So my if you take bonus from us or from the other broker, make sure you read the agreement. If something is not clear, because this is kind of legal language, team, make sure you understood everything right. Get back to Insta Forex. So can I use the bonus in case I have capital drawdown? And the answer is partly. When you hit the bonus, you must deposit ASAP. Now, what do I mean? What do I mean by when you hit the bonus? Now, let me give an example. Your deposit is 1,000. Let's bonus is initially your equity is 1,300, and all of a sudden the price goes wrong. Yeah, something which you didn't expect, and your equity became less. You survive just because you have bonus. In that case, unlike other brokers who just don't allow to use it completely, we tell you, okay, you still can use it for a short amount of time, but deposit as soon as possible. If you can't deposit right now because you have some problems, contact us and we will try to give you a bit more time. But don't wait, because if you are going to wait for, let's say, a week, all the bonus, all the funds will become bonuses in accordance with the agreement. So if you have capital drawdown, you do nothing and you just wait, all the deposit, everything will be transferred to bonuses. So this is something you should be aware. We have a very sad case with the trader from United Arab Emirates. This story, then he made an incredible profit of $50,000, and to find out, and he held this position for a year, so without any try to deposit. And all of a sudden, because of course he never read the bonus agreement, he realized that that becomes bonuses. Of course, this is very special story, and of course we are negotiating with them. And we are trying to help him, just because this is fascinating achievement, and we want to help the great traders. But don't follow his example. This is not the best thing. Just make sure you know the rules. Make sure you know how we work. Make sure you know how other brokers work. And finally, my motto is very simple: right bonus in right hands. When you so your hands are the right ones. So thank you for your attention. And Before we start the quiz, I'm sure the Malaysian audience who takes part with us knows how it works, but for some of you, it's totally new. So let me explain the rules. Let me explain how the rules work. It's not really hard, but you should know the story. So first of all, there will be a test question and there will be 3 real questions. You will have 2 minutes for the answer. And the first one who is going to give the right answer, he will be the winner. As soon as there is a lot of you, and there may be quite a lot of answers, we have quite a big team who will be watching your answers. So, I just want to say hello to our heroes behind the scenes, to Catherine, to Ludmila, to Zaf, and to Hafiz, who will be trying to find out who was the first of you. But secondly, what you should know, there are 2 ways how you can answer the question correctly. First of all, you can have knowledge, and secondly, there will be a picture, which will be a kind of hint, which will hint you to the right answer. And the hint can be very direct or can be quite tricky. So I hope the message is clear. Not to webinar hosts. Make sure you write to panelists or all panelists and participants, because if you write to webinar hosts, so start with price. Make sure you all understood. So here is the first question. This singer keeps the records as the youngest ever participant at Elvis localized contest. Who is he? Okay, I hear the first. I see the first right answer from Jason Shem. Jason, unfortunately, this is not the. This is just a test. But yes, you are right. How to find out the way. Know that if you are a die-hard fan of Bruno Mars, you probably know what he has visited. And secondly, you look at the hint, which is sneakers. Probably you don't know the singer, which is sneakers, but then you might think about some other things like Twix, like Bounty. And finally, you think about Mars and wow, Bruno Mars. And this is the right answer. So Mr. Jason Shem was the first. Jason, you are very, very smart, and you made very, very quick right answer. But unfortunately, that was just a test. And now we are going to the real questions. So the first question is for 100 USD bonus. Remember, all the profit can be withdrawn, so it's not no deposit bonus. This is really nice story where you can just immediately withdraw. So the Landa blah 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 strategy in 2020 is a day trading strategy that seeks to take advantage of the trading range prior to the London opening session. We missed just one word from this quote. Which one? Okay, they have Fazli Yusuf. And Fazli, my congrats. We will contact you after the webinar. So yes, on the picture, you can see the second album of Miley Cyrus, which is called Breakout. By the way, guys, if you never heard one of the last, The Midnight Sky, you must hear it just after the webinar. And yes, exactly. So Breakout was the right answer. So you got it very quick, and Breakout is the correct answer. So my congratulations to the first winner. And we go to the second question for 2,000 US dollar bonus. Hope you guys are ready. And here it is, a bit more tricky. The Hollywood legend Paul Newman was nominated for Oscar many times, but he took it only with the 5th attempt with that movie. Which movie? Okay, that's more tricky. That's more tricky. So far, no right answers. Yeah, somebody has seen the rupees, but no, that's not so direct. The hint is not about the rupees. Just take a close look at this money. There is something special about this money you can see on the picture. So far, no right. I don't see at least the right answer. There is something very, very special. Oh yeah, they have the right answer. They have the right answer. I'm not sure who was the first. I'm sure our team is going to find out who was the first one, and make sure you subscribe our ShowFx World Facebook page, because there will be all the information about the winners, and we will contact. So I've seen quite a lot of people who gave the right answer. So what do you see on the picture? You see the picture of different colors, yeah, different money with different colors. And this is the direct hint. The answer is the color of money. That was probably the first big movie of Tom Cruise. That's about the playing billiards. If you've never seen that movie, just as soon as we finish, and if you have time, make sure you watch it. That's a really great movie. So the color of money is the right answer. Congratulations to the winner. Finally, we go to the third question with the probably the best prize, Huawei MatePad, which you can see on the screen. So guys, hope you are ready. And now the final, probably the most difficult question. So the libertarian Ron Lockwood wants to create a free state. He would like to name its currency in the name of a very famous writer who inspired him. The name of the currency is the same as the currency of existing currency of state. Okay, so far no right answers. Oh no, there is a right answer, and it looks like Marshall Willis was the first one. It looks like Marshall Willis was the first. Marshall, congratulations. That was really, really impressive. So here is an explanation to the on the answer. Libertarian, probably you know the icon for all libertarians. This is Ayn Rand. Yeah, Atlas Shrugged, very famous book. And so he named the currency for the name of Ayn Rand. So there is currency rand, which is in South Africa. And what you can see on the screen, you can see Morgan Freeman, who was playing in a great movie called Invictus, and he was playing Nelson Mandela, probably the legendary and probably the most famous person from South Africa. So South Africa is the right answer. So guys, it has been a huge pleasure to host the quiz and give a presentation to you. Thank you for your attention. And I am happy to stop the demonstration and give the floor to Anna.
Thank you, Pavel. Thank you, guys. So congratulations to the winners once again. And I hope you really enjoyed all the prizes and everything that we gave away today. But that's not all. We still have one prize that any of you can get. So here you go. I will do the demonstration of the screen once again, and I will show you what you can get for free. So 1 second. Let me go to here. So basically, guys, what you see here is, let me once again, maybe I will, how do I, yeah, okay. So what you see here, guys, sorry, I can't do it full screen somehow. You can see here the full Forex training course from Insta Forex. What is it? It's 60 chapters about everything you need to know about trading. Here you can see the contents. You can see Introduction to Forex, where there are about 20 different chapters. Then you can see basic concepts of technical analysis, everything about technical analysis. types of trends, support and resistance, Fibonacci. The third chapter, introduction to graphical analysis. Then method analysis and technical indicators. Trades. So here you can basically see the whole trading guide about everything that you need to know to start your effective trading on Forex. So my question to you guys, do you want to get this book? And do you want to get this book for free? Who wants this book for free? Okay, guys, I see here answers in the comments that you say yes. Okay, what you need to do to get this book is very, very simple. After this webinar ends, you go to one of our Facebook pages. We will send you them in the email once again, but you can basically find us. Here's one Facebook page, which is for Malaysia, and here's another Facebook page, which is for English audience. So you go on one of these pages and you go into this section that is called reviews right here. And you write us the best review about our webinar. Please let us know what you enjoyed, whether you liked it or not, maybe some comments and recommendations for the future. And the authors of 10 most interesting and helpful reviews will get this book for free, okay? And now, guys, we thank you so much for participating in the event. And please let me know if you enjoyed it and if you have any questions on our webinars or on our events, you can write them in the comments and I will answer them. And if not, we will be happy to see you back because I remind you, we organize our webinars every 2 weeks, okay? Especially for Malaysians. If you are from Malaysia, then you are a lucky one because we have our main focus on Malaysian audience. And for Malaysians, we organize webinars every 2 weeks, but now we will try to organize more of international webinars as well. So those of you who are from other countries will have a chance to participate in our webinars as well. Okay. So guys, once again, thank you so much. And we will see you on our future events. Thank you so much and bye-bye.